We just got the new CPI Inflation Report. Probably the biggest report we have seen in quite some time, a Fed favorite to look at right now, and it came back better than expected. 7.7% annualized, 8.2% last month. Expectations were 7.9%, so we beat expectations. We are starting to come down. A lot of things we have to remember are shelter inflation, energy inflation, and we'll kind of get into those in a second. But yeah, great report. Let's look into the logistics. So here's the new release, right? Rose 4.4%, increased 7.7% annualized. Now, look at this. The index for shelter contributed over half of the monthly all items increase. Shelter is huge. Shelter is huge. And shelter is still going up, right? And it's very important to look at everything else and shelter knowing that it contributed to half of it. So let's see, what did it do? We'll go through them all right now. All items 0.4, food increasing, but at a slower rate. So that's really what these things mean. If they're positive, they're still increasing, but seeing that slower rate is huge. Food, slower rate. Food at home, pretty much slower rate. Now look at these ones. Energy. Energy had a great September for inflation, and now we're not doing so great. Like look at fuel right here. Negative 2.7 last month to up 20%. It's so volatile. It can change monthly very clearly, and it has a lot to do with inflation, which is not as bad as you may think. Of course, energy is a very big part, but this volatility will eventually smooth out. So we can kind of subtract food and energy from our inflation data, right? So all items less food and energy from 0.6 to 0.3. That is great. Like I said, food and energy are very volatile, mainly energy, of course. Now, here are some big ones. Right here, these aren't really too big, but new vehicles. New vehicles are still going up. A lot lower, a lot less, but they're still going up, which is very interesting to me. Used cars and trucks dropping significantly. So if you're going to look for a car, probably buy old because they're just dropping so much more. Services, less energy services down, right? That energy is just ridiculous. And these ones right here, shelter. Shelter's a big one. We're going to really dive into shelter. But shelter actually increased this month. Expectations from banks and analytics and economists thought it would be flat, but it actually increased, which is not great. Transportation services down pretty heavily. Medical care services down as well. But we're going to really look at this in the shelter one right here. So shelter. Remember, these, so first of all, these numbers right here that I have in the little half box are the weight of how important they are in the calculation. So, right, seeing this 0.3 for cosmetics, perfume, right, means it's not weighted very heavily. Seeing a 57, 32, 32 means it's weighted very heavily into the calculations. So yes, services less energy, very heavy in the weight, and that is increasing at a slower rate, which is good. Shelter, again, very heavy in the weight, increasing. So we see shelter increasing, right? We see rent of shelter still at a high rate because it is so very lagged. Shelter is much more lagged than any of these other things. We've seen shelter prices coming down. We've seen rents coming down dramatically, but they are still increasing just at a much slower rate. Or they're still increasing, not even at a slower rate, and some are decreasing ever so slightly. And that is a very big part. But the good news is this is really the only sticky situation. And we are just a couple months out from it being fixed. So if everything else continues on the downturn that we're seeing, and inflation and shelter inflation starts to come down when all of the work the Fed's putting in actually starts doing its thing because of how loud it is, we will see shelter inflation come down. We will see rents come down. We see it in the numbers already. It just needs to catch up on the CPI reports, which is essentially very, very good news. We are seeing everything that needs to happen. Now, here's a big problem, is the stock and bond market, right? Stocks are rallying right now. Bonds have fallen a bunch, or bond yields have fallen a bunch. Bonds are rallying, and that only will increase inflation. Powell said at the recent speech how stocks and bonds going up will undo a lot of the work the Fed's been putting in. So, right, although these numbers are looking great right now, we still have the December meeting, which is going to be very crucial. But if stocks and bonds rally before, we could see more inflation, and they might have to come back and say, hey, look, our new target rate is actually above 6%. And that's something that's very important to think about, is they don't want stocks and bonds to rally because it'll undo so much of their work. So if they see a rally, they might come in, step in, and say, hey, we're actually going to raise it by 75 basis points in December and cause a lot of fear in the market. And so that's something to think about, is what does the Fed want? What do the people with the power want to happen? And it seems like they want stocks to not rally.